I expect you guys to work as hard as you possibly can, and in return, I will work as hard as I possibly can to make you guys successful.
So, here at Everlasting Capital, we're big into equipment financing, which poses the question of which way should I go? There's there's more than two. There's multiple different types of equipment financing that we handle here. First being a capital lease, and the second being an operational lease. So I guess you could say pros and cons to either. As far as a capital lease goes, you can look at it more as like a traditional equipment finance. Terms anywhere from 2 years all the way out to 5 years or 60 months. Some of the benefits are you're able to write off 100% of the cost of the equipment in the first year, so it gives you a huge tax benefit. As well as the buyout, most of them are considered what's called a dollar buyout, so essentially you're financing 100% of the equipment, and you own it after you make your last payment. On the flip side, you've got what's called an operational lease. A little bit different. The way an operational lease works is you'll have different options as far as what the end buyout is. It's similar to a car lease. You have an option of where you could have a 10% buyout, where 10% of the purchase price is either due at the end of the lease term, or the equipment can be returned. You also have what's called a fair market value. That's more closely similar to an automobile lease. So there's a residual at the end of the term of the lease, which determines how much the equipment is worth at that time. And you have the option to either buy it out or B, return it. Some people like to do this because they purchase equipment that needs to be basically switched out more frequently, as opposed to something that's a longer lasting asset. The only real, on the flip side, the only real downfall to an operational lease is you're only able to write off the payments that you make on that piece of equipment in a year's time. So if the frequency of purchasing and having newer equipment under warranty is more important to you than the tax write-off, then the operational lease is by far the road to go down. If you're looking for a tax write-off and you're going to be keeping this piece of equipment for a while, then a capital lease might be the way you want to go down.